Good morning, everyone, for those on the West Coast. Good afternoon for folks joining on the East Coast, and evening for those joining out of the EMEA region. Rohit will wait about another 30 seconds to a minute as folks are trickling in.
We had an overcast morning in San Francisco today. The same it's been for like a week. Ever since I came here, it's just been raining.
Hopefully I didn't bring the umbrella or rain jacket this time, so hopefully I'm spared on my walk back to the hotel this time. All right, I think we'll jump in as folks are joining. Actually, it looks like we have another batch of people coming in. Spoke too soon. We'll wait another minute or two. It's fun just waiting to start. Rohit staring at you on the other side of the Zoom grid, even though you're only a few rooms over from me.
Well, I'm just like going over my notes, so last minute
Perfect.
changes.
Just throw out any of the talking points entirely and go off script.
Sure, let's try that. I think we should begin.
Yeah, let's dive in. Cool. Excellent. Welcome everyone to Synaptic's second webinar, Unlocking Untapped Value in Portfolio Updates. We appreciate all of you joining us today. Just to kick things off, we are going to first, before we go into the intros, just wanted to highlight for everyone what we are planning to cover in today's webinar. 4 high-level points that we'll be focusing on. What everyone's here today, really to listen in on and discuss. We do want this to be interactive, so feel free to send questions and comments in the chat, but we will be covering the power of portfolio company data, the challenge of tracking portfolio data at scale to unlock its power, the ideal approach for extracting and standardizing this data, and then high-value workflows, analyses, and use cases that standardized portfolio data can enable. And as we naturally do with any webinar, before we kick off, just some housekeeping items. As I mentioned, we want this to be interactive. There will be a Q&A session at the end. We really do value your participation, so please feel free to submit your questions in the Q&A box throughout the webinar. We'll address as many as we can during the Q&A. We'll even try to address some of these live, especially if Rohit is covering a topic and I see something pop up that's highly relevant. I'll try to bring that live within the webinar. And then second, technical issues. We have a dedicated team on the other side to support with that. If you or colleagues are having trouble dialing in, don't hesitate to reach out to us. Someone will assist you on the other side from the Synaptic team. And then finally, the event recording. As you all can see, we are recording today's event. We will share the recording link with all registered participants. Feel free to share this with your colleagues as well. And without further ado, we'll jump into introductions. I'll briefly kick this off and then pass it to you, Rohit. For everyone that doesn't know me, I see some familiar names joining here, clients and folks we've been speaking to. My name's Christian, based in New York City. I lead sales here at Synaptic. I'm in San Francisco for the next week with Rohit. Don't hesitate to reach out if you all are close by and want to grab a coffee or say hey to us. And I've been with Synaptic for about 3 years. Prior to this was at CB Insights for around 6 years. So intimately familiar with this private market investment space and always happy to dive into topics like the one we're covering today. Off to you, Rohit.
Thanks, Christian. Really excited to be here. Like you mentioned, it is Synaptic's second webinar, but it is my first one. So excited to see what this format can do. For folks, folks that don't know me, I'll talk a little bit about myself, but I'll also talk a little bit about Synaptic. Like I'd like to introduce Synaptic to you as well. I'm Rohit. I'm the CEO and co-founder of Synaptic. I come from a tech, data, and process background. Before starting Synaptic, I was handling tech at VY Capital, a Dubai and San Francisco-based fund that you might have heard of. They have investments in Reddit, SpaceX, blockchain.com, amongst others. All this to say that I've been in the same seat as like a lot of the attendees here, and I understand what needed for a fund to run. Like it's like I don't come from this tech background where like, hey, this is the ideal process and this is how it should be run it. I know what every day at a fund is, like what different pulls and pushes are at a fund. I hope I can add some value to your understanding of the space today. Even though we have a solution in this space, but my goal today is not to sell that solution. My goal is to like walk you through our journey. How did we like stumble on the solution, our motivations, tell you what we can do with portfolio data because we're really excited about it. So no selling, I promise. I'm just going to talk about our journey here. I started Synaptic 7 years ago with my co-founder with an explicit mission of helping investors to make better decisions using data. Our platform essentially allows you to combine best-in-class data sets and apply them to various parts of the investing workflows. Like I said, deal sourcing, diligencing, thesis formation, reporting, etc. You can do all of that by using best-in-class alternative data sets. A lot of peers that you would recognize are our customers. Like it's one thing that I'm like really proud of. Ribbit Capital, Index Ventures, Green Oaks, Dragoneer, General Catalyst, GICs, Morgan Stanleys, SoftBanks are all customers, are all people that like bought into the vision that like Synaptic has, and our customers that work really intimately with us. So it is a real privilege and a big motivating perk of my job, to be honest, to talk to all of these smart people and learn from them. Like this keeps me really, really motivated. And like you can see, I really like to do that. So I went to these folks as part of this, I asked these folks, our customers, our prospects, about the one thing that we would unlock for them. Like there's a Synaptic platform, but what is that one additional thing that I can do for you? And most of them wanted to do more with portfolio company data. And we're frustrated that they can't, like it is a very unwieldy data set and they can't. The overwhelming response that I heard from them was, Rohit, you talk about proprietary data sets and alpha that we can derive out of these data sets. But the number one proprietary data set that we have that we aren't able to use right now is our data from portfolio companies. It is quite literally insider information. And when I of course, like when I thought about it, like I wanted to dig deeper into that. That got me like really excited. And I realized that like across different workflows and different responsibilities that an investor has, the pushes and pulls of the jobs, like I say, portfolio data can be really helpful. For example, like the first thing that came out of this was like the best VCs are learning machines. They just want to know. They just want to know everything. They just want to know everything. They want to learn from everything, and they want to like use that in their own investment processes. And there is such richness in portfolio company updates. I'm reminded of this example of this customer that I was talking to that is looking at their own portfolio company updates to figure out which AI companies are hot because their own portfolio companies are spending money on them. That is real validation for an AI company. And there is such richness in portfolio company updates when it comes to that. VC as an investment class and private equity as an investment class is really unique in the sense that like you can also steer your company's future. In fact, like it's not only something that you can do, it is expected by your portfolio companies. I would be really, really pissed if my investors don't like help me every month. I actually need help every week, but like every month is a good rubric as well. Fund planning is also a non-sexy, but absolutely necessary part of the job. Like it is a part that like people don't like to talk about, but it is a part that's really, really important. Portfolio data plays a really important role there. You need to plan follow-on investments. You need to reserve part of the fund for those follow-on investments. It's always like deciding between A, B, C, which one do I reserve this for? You need to decide on exit timing. You need to decide on liquidity. You always need to have that like information. And the key part about like getting that information is knowing your portfolio companies better, right? And then reporting is a big time draw. We'll talk about it later. Again, it's a non-sexy time sink that just eats people time, but it is a necessary part of the job. And we discovered that the part of the job that eats time for people is collating data, getting all of that data together. It's not the communication that people hate. They really love the communication. It is part and parcel of why they went into this job. It's just collating all of that data, backbreaking work, manual work that is like not value additive, just collating all of that data. And we see like portfolio data, like if you are systematic about using portfolio data, extracting portfolio data, that is just like it just goes by like a breeze. So the next question, of course, in my head was, I get it. Like I dug deeper into the use cases. It just makes sense. Portfolio data is very useful for like we see across this use cases, workflows. I get it. It is important. But then why aren't you already using it? And in my head, like I've always been told, and we've read about this, that there are no stupid questions, but sometimes there can be. So folks looked at me and said, because it's hard, Rohit, like, do you really think that like we are telling you this and we haven't tried? It is hard. The number of updates across even a medium-sized fund portfolio is a lot. Like the illustrative example that we have is like if you have 100 core companies, or even if you have 50, you're talking about 4 updates at the least, right? 4 board decks at the least. Oftentimes you'll have like monthly updates as well. The board decks come with like accompanying data packs. The board decks come with like MISs, etc. We're talking about like 600 to 1200 files that need to be parsed or like studied every year for even like 50 to 100 portfolio fund. The data comes across in multiple mediums, sometimes in board decks, MISs, emails, Slack, Telegram, WhatsApp. I use WhatsApp and Telegram a lot with my own investors. And the really rich insights come from like face-to-face meetings. Like we've talked about this with multiple investors. The really rich insights comes from like face-to-face meetings. So people want a module that like just takes their notes from meetings and like extracts data out of that. And the data is not standardized. These like startups are not fully mature companies. It's not the startup's fault. They often have no CFOs. And even when they do, the CFO's job is to not like standardize reporting in the first instance. It's like to optimize cash flow. It's to optimize the company. And even when they start focusing on it, the metrics for startups are like really unique. Like gap metrics, I think all of us would agree that gap metrics can't cover a startup's growth trajectory fully. The really interesting part about this, between Christian and I, and other members of the team, we've talked to 50 plus funds till now. And I have to tell you, no one has a system that they really fully love right now. Everyone's using portfolio data in like some way, even if it's not systematic, they're like going through the reports, but no one has a system that they fully love right now.
Yeah, Rohit, and that cues us up well to the poll we have planned as well, that point. So it is really interesting, and emphasis there, none of the funds that you or I have talked to love the way they track portfolio company data. I find that fascinating because we do this every day with the conversations we're having, and we really haven't spoke to a single person who said, I love the way we track the data. This process is excellent. And the poll that we're pulling up here today, you'll see this pop up in a second. I'll go ahead and read the question. But what I really want to understand, just based on the audience we have a lot of really smart investors and folks from data science teams and finance teams on the other end, is how do you capture data from your portfolio companies? As you can see, select as many of these that apply. We'll give folks about a minute to answer this question. And since I don't have my timer up right next to me, we'll just feel this out as the results are coming in. It's interesting. I'm looking at some of these right now too. And Rohit, we talked about this as we were pulling up some of the poll questions, but this triggers just a conversation I had last week with an investor that was telling me every quarter, multiple people are spending 40 to 80 hours. This was their estimate. It's a very off the cuff estimate. And they were saying every quarter, though, this is across the investment team, the operations team, and finance team, where someone or multiple people from those teams are trying to track down data from portfolio company board decks while they're either preparing for LP meetings or just general presentations. And to me, I thought that sounds insane for someone to spend, even if it's 20 to 40 hours a week. This should be easily accessible data.
Yeah, I was really surprised as well when you told me about that. Yeah.
And let's see the results here, because this is, I'm curious what people have said here. I'm sure manual capture will be one. Yep. And then we see others that are really common as well. And we'll get into some of these other processes as well as we continue. Excellent. Thanks everyone for participating. And then finally, second question here, just last poll to close this out is, how satisfied are you with the solution you are using today? Really curious what folks have. We certainly have a bias of what we think people will say, but we want to gauge the audience here, and make sure you only choose one. You can't choose multiple here, obviously.
Yeah, it'll be, Christian, it'll be really weird if everyone chooses very satisfied. What do we do in the webinar after that?
Yeah,
What
we
do we
just
do with the product after that?
shut this down, and then we've been going down. Yeah, well, we'll have to completely pivot the direction we've been going down, and all of our clients will have been fooling us.
Yeah, we'll have to try to find new jobs then.
Yeah, exactly. We have about 30 more seconds. We'll leave for this poll. Actually, it looks like we have the majority of the results in. Let's pull up the poll results here. I want to meet those very satisfied individuals.
We want to learn, like,
Yeah.
no shade, but like we really want to learn.
Yeah, absolutely. I genuinely, and that actually, if anyone, it'd be really interesting following this. If you all are interested in chatting with us after, please feel free to send in a chat to our team. We'd love to chat more about what processes people have that are working, and then even folks that just have a lot more to be desired in their process. We'd love to chat there as well. But let's
Like, as expected though, the majority of the people are like not satisfied with what they have right now. Yeah.
Yeah. And I think as well that Rohit, you were talking about this the other day in one of the meetings we were having with an investor, but there was the story about an investor where they said the fund managing partner was asking a bunch of questions, and they talked about how embarrassed they were just by not having answers. And I think that's our goal here in mastering this process is to cut down on that, obviously, a lot. I'll pass this back to you, Rohit, because we'll dig into now the process. How do we go about doing this really well?
Yeah. So the polls were a good interlude into the story that I was telling you about, like how did we like start doing this and like our motivations around this. But in terms of like where we were in that story, we were established with our customers that extracting and using data from portfolio company updates is hard. We established that data, if extracted, would be very useful as well. So being the naive entrepreneurs that we are, we set about building a system that works and solves this problem, right? Like that's the first obvious thing. We picked like an initial customer and we try to solve it for them. I thought, how hard can it be? We go in and quickly build a system that works. We plug that into the Synaptic platform that we already have, and it'll take max 3-4 months for us. It obviously did not take us 3-4 months. It took us 18 months from conceptualization to where we are now, and we're still building this out. Like we have a solution that works, but we can improve it so much more. But while we were like thinking about it, like it became clear that there are two approaches in front of us. And I'll talk about the approach on the right first, which is the more common approach. I saw lots of folks select that as well in the poll. But this approach essentially is send a standard form to your portfolio company and expect them to fill in the data. This is eye level or one of the new solutions like Westberry and Standard Metrics that are like really making waves right now. The pro for this, of course, is you don't have to do the work. That's obvious, right? Like they do a lot of the work. They follow up with like founders. Founders have to like fill in the form. You get the standardized data. The con for this is that I, as a founder, have to do the work. And what this means is that the compliance rates can be spotty. I have to be candid, and I have often missed updating them more times than I'll care to admit. What by nature of like asking your founders to do this, you are essentially only asking for 5 to 10 or 12 metrics. And these are like really massaged metrics that you get. I was talking to this investor and this really interesting point came in, like when you explicitly ask things from like founders, the output that you get is like heavily massaged. When founders are trying to communicate with you, they are much freer in terms of what they communicate with you. But essentially what you get is like 5, 10, we've seen 12, even 15 metrics in some cases, employee count, cash in bank, burn, etc. Standard works. Not the unique metrics that like really drive businesses, especially at like venture stages. The metrics at these stages are like really different. The use cases that I outlined in the a slide like previously, talking about like to investors, will only partially be fulfilled by these 10 metrics or so. Because I'm not really understanding what's unique about a business. I'm not really understanding what's unique about a sector. For example, I'm not really understanding what's unique about lending in fintech. When I look at like just these metrics, lending has its own sets of like metrics that are like really important. So this means that this approach works, but there are a bunch of cons for this. And the approach on the left is where we really get deep into this data. I saw a few folks like select that as well, which is like, this is either you have an intern or someone on the team do this, maybe 2 people on the team do this. Extract data from all the updates, put them in an Excel. You know exactly how you want to put that in the Excel, and then drive analysis on top of that. The con for this is like, if you have an intern do this, every 6 months, when the intern changes, they're going to like, the data is not going to have that continuity. If you have people doing this, in theory, you can have all the data that you want. But in practice, given the time it takes, and we are very familiar with that, just given the time it takes and the number of people you can apply, venture funds are very lean operations. The number of people that you can apply to the problem, that you can only do it for, in reality, you can only do it for a few important companies. And you don't, for a lot of the companies, you don't have the depth of metrics that you want. And as we'll see later, like it starts to get really interesting when we start doing all updates. That's when you start like incorporating all of this data into this fund brain that you can then rely on. And as we saw in the poll as well, we've also seen a couple of funds use outsourced teams to help with these, but those are expensive and they come with a management overhead of their own. And the funds that we saw use them, we're only pulling in 15 metrics, 10 metrics. They're not pulling in all the metrics that that we think are useful. The second approach, like when I talk about like when we were evaluating these, we had 2 of these approaches to like think about like as we were building our own solution. As a programmer, of course, my bias is towards a more automated approach. But the second approach is the approach that is more interesting to me when I thought about it from a customer perspective. There are a lot of folks building the first approach, and it works for a lot of use cases, to be honest. But I really think that investors that really care about an edge will care enough to fully utilize portfolio company updates. I truly believe that. That capturing metrics from portfolio updates is significantly more valuable, but the resource demands are really high. So it comes with a caveat that, like, provided you can cope with the resource demands. So we went about solving this problem. And my favorite way when I try to, or like when I want to like solve a new problem, is to sit behind someone who's doing this. And it sounds creepy, but we had like some folks very generous with their time to allow me to do that. I sat behind them, I learned what they were doing, and then I tried to do it myself. I tried to like, hey, they've like helped me enough. Maybe I should like do a bunch of updates for them and help them do this. And I realized that I could classify what I was doing into 3 steps. The first step is, of course, the extraction. And I'm sure a lot of folks on the call will like resonate with this as well. This is extracting the data. You capture contextual things like units, as of dates, etc. They're not often apparent. You have to take that from like somewhere else in the update. You clean the data. You do sanity checking on that data, which is like take a bunch of reports, see that the data makes sense. If you've done all of that work and the data doesn't make sense, all of your effort is wasted. And then the third step, of course, is standardizing metrics or renaming them. Like, hey, this metric in this context means this, so I'll rename this because this is my fund's preferred way of naming this metrics. For example, like burn is a metric that we think about like a lot of like companies just like define it differently. And everyone has a way of like doing this. So I just have like a fund's preferred name for it and I rename the metric name to that. And like I said, like coming from a programming background, we tried automating all of these things. We tried to think about how can we automate all of these things. And we're going to the next slide, but I'll tell you this with a very heavy heart, that notwithstanding the recent AI advances, full automation does not appear probable for this use case. And we'll talk a little bit about this. There are a number of solutions that like say that they can do it, but we have gone really deep into this. And in our opinion, full automation is not probable right now. And the reason for this is looking at this slide, this was really surprising to me, but 1/3 of metrics that we care about primarily come from graphs. Like we take information from graphs, the information is primarily in the graph. And if these were like not important metrics, we wouldn't have like taken them. But a lot of the really important updates come from graphs as well. And it would be foolish for us to like not incorporate them in our own extraction process. So that is something that we have seen is not automatable. And to be honest, like the examples that we are showing you come from public companies. So these are companies that should have like really large teams building this, like really large teams like focusing on standardizing all of this. The private company examples are like even worse. Obviously, we can't show them to you, but like they're really much worse. Like if you look at Cloudflare, nowhere does it say that like the number are in thousands, but that's something that you just like know from the context, like that, hey, this number does not make sense if I don't apply the 1,000 multiplier to this. Or in the Shopify report, in the same metric, same report, the same metric is called two different names. You can't have an AI automate this, right? Like the way we disambiguated this is looked at the graph and saw, okay, the metric values are same, the graph is the same, so it's probably the same metric, and we have high confidence that it's the same metric name. And there are a number of examples around this. And I don't even have to talk to you, like I've talked about about this a fair amount, but like metrics can be named differently. Even when the metrics mean the same thing, they can be named differently. When they're named the same thing, they can mean different things as well. So it's both. And you need to like apply disambiguation on top of this to like really get accurate data. And AI just can't help there, like in this use case as well. Like this is from a real example. We have 3 gross margins. We have to figure out which one we want to like map to the global gross margin definition. And that comes from like reading through the report, having the ability to read through a financial report, having the ability to understand that, having the ability to understand a business, and then applying that. And AI can't help in these use cases.
And Rohit, that's exactly, this is the metric name mess that we talk about here. Is it a good example is with terms, just to put it into more context for folks, is it net burn or cash burn or free cash flow? How do you decide which is the right metric to be tracking around these companies? Yeah, back to the next slide.
Yeah, again, this is a slide, again, with a lot of heartburn as a programmer, as a tech person. I have to tell you, in my opinion, and in the opinion of like folks at Synaptic that have been attacking this problem for a while, the ideal approach is AI with a human in a loop. We automate the repetitive processes, the extractions, for example, the getting data from tables, the extracting repeated data from text. We can automate a fair amount of that, but we do need a human in the loop, and not a human in the loop, an expert in the loop to help with higher order judgment. This is someone who's been reading reports for a while, who understands how companies report things and like can basically act on that information. AI alone does not work. The accuracy is abysmal. Like I know there are a number of systems that like talk about just ingesting files and like spitting out numbers. It doesn't work. Like when we did it, like accuracy for AI-based approaches for us was like in the 60 to 80% range. 80% is a stretch, to be honest. And it doesn't tell me where it feels confident and where it doesn't. Like as many of you would have like known talking to the various LLM bots, that AI lies very confidently. Like when it's wrong, it's really, really, really confident about like being right. And it can't differentiate what it knows and what it doesn't know. It's just like it can be like it lies with like really high confidence. And to ensure accuracy, which I think is a really important parameter for this, like if you build a system, like there are a fair number of folks from the data side here as well. If you build a system that's only 80% accurate or 85% accurate, I have to tell you that like investors are not going to use it. You can't just rely on a system that's like only 85% accurate. Like it might be useful as like a gimmick, but it's not going to be a system that you're going to like consistently trust. Uh,
And Rohit, I know you'd love to keep talking about this for, for a long time, but let's just in the interest of time, let's jump to focusing on the rewards. You get at the end of this process, and I'm sure that's what a lot of people on the call are wondering. There's also a question that came in that I think is relevant not only to what we're just talking about now, but also to the next poll that we have coming up here. So why don't I go ahead and read the question real quick? Let's talk about that, and then we'll go
sure,
into the
sure. Thanks,
great. So
Christian, for like keeping me focused on what's important. And I love to talk about the process, and I know some folks might be interested in this. Please feel free to like message me after the call. I'm Rohit at synaptic.com, and I'd love to like talk through some of the work that we've been doing here. But yeah, again, thanks, Christian, for like interrupting me there. I
of
know
course.
you're keeping time here. Yeah.
Yep, exactly. But let's get this question. We'll try to answer it quickly because this is something that we've heard from other folks as well. The question is, I've come across a few tools that claim you can upload updates directly to them and then ask questions about it. Is there a catch here? Rohit, I'll let you take that. I have some thoughts, but they'd be just
We
repeated for things, yeah, that we've discussed.
oh, Oh, we tried building this. So essentially, I think what we're talking about is a LLM that takes in all of your PDFs in, all of your documents in, and then tries to spit out answers. The number one limitation is the token window limitation, which means that like I can often like just search across one or two documents and not across the complete history for a company. And I would argue that even more important than complete history for a company is the complete history across all the portfolio companies, which is even harder to do. I mean, with Gemini and the extended token window that they have, this might be like this may change in the future. But right now, what is essentially happening with these systems is a system called semantic search, where like they take what you have. They try to like search across documents for this, and then use an LLM to like once they've pinpointed a document, use an LLM to extract data out of that document, which is not as good. And the accuracy is not that good as well. I would say the approach like of just extracting numbers is much more accurate. The accuracy isn't there. Like in the system that we have seen, in the system that we have tried to build, and we have like a bunch of our customers try these systems as well. The accuracy just isn't there. And the number two point around this is like AI just doesn't do really well with like the LLM just don't do really well with like numerical values. It just it we've all experienced this. It just doesn't like work the way that we want it to. And we are talking only about numerical values here. So qualitative insights perhaps, but quantitative insights to expect that out of an LLM in the current state of the art, we haven't seen that to be successful.
Yeah, I think that's spot on. That's the thing that came to mind that we've talked about often is numerical operations for and number capture. It's just not the optimum approach that you can apply there, and we see that breakdown when with the accuracy. Let's jump into the quick poll though. Thanks for getting into the details there, Rohit. For everyone looking at this poll right here, I'll just read it out and then give 30 seconds for folks. It says, what would you use a clean standardized portfolio database for? Choose your highest value. So don't choose multiple here. We expect that these will probably have a variety of solutions, but there are some universal use cases as well that it seems like everyone we speak to, it really, really wants to implement. We'll give a few more seconds as these responses trickle in. All right, let's pull up the poll results. And looks like get alerts when metrics for any portfolio company change meaningfully. I know we'll be getting into that as well, and talking about the benchmarking use cases here. So that segues into From the poll results, you all see there's just a variety of responses. And what we're looking at here is some of the key applications we've found thus far. Now, I'll put emphasis here because this is something we've seen working with data over time. I believe we're only touching the tip of the iceberg in terms of key applications. We talk about this often with the investors we worked with, and this is something that I think comes from the caliber of investors that we get to work with, people that are thinking about data in really intelligent ways. We've seen that once investors realize they have access to all this clean data, the use cases really start to flow in. And now that we've covered a lot around how we can ingest data from updates, this is where we start thinking about going from data richness to insight richness, with all of the processes of collecting that data in a systematic manner that Rohit was talking about. So we're going to get into just a sample of these use cases. Again, emphasis here, we really believe there are substantial use cases beyond what you're seeing just on the screen to be figured out. And I'm very confident we're already seeing this happen with the investors we're working with, that they're going to unlock a lot more use cases that maybe we haven't even thought about once they have this data at their fingertips. And naturally, when we think about a common use case, portfolio company profiles here, that ability to track and analyze any metric for a portfolio company, it's the first thing that comes to mind when you think about having all of this data in an easily accessible manner. And when you're able to do that and access all that data on a company profile page, just think about all of the questions that you can confidently answer. And these are questions we're seeing investors actively do. Questions like, is the company hitting plan or not? Where is it deviating from the expected plan? What's my company's run rate? Or other use cases that come out of this, like being able to easily prepare for a board meeting. I talked about earlier that conversation last week and the preparation that goes into it. We're really cutting down on that amount of time that that folks are focused on just collating all of this data. And then most importantly, what investors are there to do for their portfolio companies. How can you advise the company better on where it's trending? And you have all of this data, learning from your greatest hits and greatest misses. You'll hear us talk about that often. And I think naturally, when you have all this data together, you saw in the results, a lot of folks chose benchmarking as well. So we think about having the data on a profile level. We look at some of the examples we had up earlier around having the data together. If you think about the benchmarking application, you can take any metric when it's been tagged appropriately and in a clean manner and plot and compare those metrics across not only your portfolio, but imagine being able to do that across diligence targets or comparing late stage portfolio companies that you have against their public company peers and benchmarking their performance. And what we're looking at here is in the benchmarking case, it's definitely one of the most powerful use cases we've seen. We're really excited about the unlocks that are happening here and think the insights that clients have been talking about pulling. I think for a lot of you that might see this, this probably looks familiar. It was actually inspired. Rohit, I'll let you kind of talk about the intent behind there, but these benchmarks were inspired by, yeah.
Yeah, if these look a bit familiar from the Bessemer benchmarks, that was absolutely the intent. The idea behind us is like you can build your own Bessemer style benchmarks for your own portfolio, and it makes sense, right? Like once you have all of that data, you benchmark what works, what doesn't work across your portfolio, and it doesn't have to be like just non-business oriented metrics. It can be business oriented metrics, and we'll talk a little bit about more that in the coming slides as well. It doesn't have to be restricted to just the metrics that we see here. And you can benchmark across your portfolio and learn from that and like see where companies are. Like when you're diligencing a company, you can understand where does this company lie within the broader universe. Is this a really, really big outlier? Do I really like, I really want this? Or like, okay, maybe these are the areas where it can improve, and then I can talk to them when they improve in those areas. So benchmarking is a really huge case that we feel is unlocked because of like just having all of this data. And then beyond static metrics, like I talk about the fund brain part, which is like learning from trajectories of your companies. learning from trajectories of successful companies, learning from trajectories of companies that struggled, which is a more probable case, and the case that like that is more interesting to me as well, which is like companies that were struggling, then unlocked something, and then started growing. I want to understand what did they unlock, and I can do that because I have all of this data, so I can graph this over time. It starts to get really interesting once you start pulling in like 3, 4, 5 years of data into this. Like everything else, doing this over time just adds to the fund brain, and then you start seeing interesting learnings out of that. You start learning from that data. You start like, this is codifying institutional knowledge, like things that like the grades already know intuitively, but like having that information at your fingertips means that like a lot of us can like also learn from our companies and like make better decisions based on that. And this use case is like uh, close to my heart because simple questions typically tend to go to analysts. At VY, for a while, these questions used to come to me. And then what you need to do is like you need to bravely mine through the data dump of portfolio companies to manually curate numbers, find them, and like answer them. And I have to say, give the analysts a break. Like I really have to like empathize with them and give the analysts a break. If you have all of that data at your fingertips, it is fairly trivial for you to query that. In fact, it's fairly trivial for you to like build a natural language query engine on top of that as well. Not fairly trivial, but it is relatively like the path is like relatively clear. The important part is like having the data cleansed, tagged, structured, so you and standardized, so you can do that. Next, please. This one is also very obvious. Krishna, the one before this, please.
Must have been a delay. There we go.
This one is very obvious as well. Like we saw when we did this for data, and this one was the highest polled. Like this use case polled the highest in our poll as well. Is like folks want to have alerts on top of all of this data. And these alerts can be of multiple forms. These alerts can be as simple as that, like, hey, I have a red line whenever a company breaches a red line, which could be like whenever they have less than 12 months of runway, or this could be whenever they have less than 24 months of runway. At 12 months of runway, I would want to be alerted much earlier than that. Whenever the company has less than 18 months of runway, send me an alert. Like, or this could be when a company restates a number multiple times. Maybe it is worthwhile for me to like dig deeper into like what is happening there. Or when a company changes a number that is 2 sigma away from what the usual trend is, I want to dig deeper into that metric. This could be a metric that's hidden and not a metric that I would typically track. Like if it's my portfolio company and I'm the associate or VP responsible, principal responsible for it, I'll read through most updates. But having that information that based on past trends, that this is the metric that's like changed meaningfully, hidden inside all of the metrics, or hidden inside all of the graphs, like I said, is meaningful to me as well. But this is something that we saw at Synaptic. Once you have the data, standardize, cleanse, you want to set alerts on it, lots of alerts. It just makes your job easier. This is my favorite slide in the presentation because in a way, this is synthesis of everything that we've been like doing at Synaptic, which is like once you get a lot of data together, that's cleansed, tagged, ready to use, you can do a lot of like analysis that are like very alpha focused. In this case, what we are doing is like we're graphing year-over-year growth in website traffic versus year-over-year growth in revenue. This is hypothetically a consumer tech focused fund. Let's like consumer focused fund, right? And you can clearly see how data can be used to like inform portfolio companies. Like for Lumenly, I would advise to improve conversion percentages. I would say that like your peers or like companies that are similar to you have a much higher conversion percentage. You are really good at like increasing your website traffic data, but if you're able to convert more of that into revenue, you're golden. Like you're golden. Like this is a clear path for you to like take. Seeding IQ is the exact opposite problem. Seeding IQ is able to like convert customers really, really well that come to the website, but is not able to extract like build top of the funnel. And I will have the opposite advice to Seeding IQ. Perhaps I will have Seeding IQ and Lumenly like sit in a room together and learn from each other. And to me, this is like really powerful in another sense as well. Like I look at my portfolio companies that I've invested in the last 8 years, 10 years, and then I can have a powerful sourcing criteria. I can understand like this is the cutoff that I need to have for year-over-year website growth, because this is the cutoff that translates really well into this revenue growth. So I don't have revenue growth like all of the companies that I look at, but I do have website traffic growth from alternative data sources, SimilarWeb, for example, for all the companies that I could potentially invest in. And then I use that to narrow this list down to like these few companies that are like really hitting my growth cutoff. And these are the companies that I want to like talk to. And hopefully I find a company that's hidden that no one else found simply because their other metrics were bad. But the metrics that I really cared about was this. And I'm able to like invest in that. Like that is real alpha in my mind. So this is my favorite slide of the presentation. The other thing that I talked about was like just how to use portfolio company data to do fund planning. And a key part of that is having an updated valuation model on a company, having an always updatable valuation model on a company. At VY, we used to do both public and private investing. For public investing, we used to have this like underwriting model. We used to plug in data from CapIQ. And now the data that we couldn't plug in from CapIQ, I would now use something like Visible Alpha for it. And we used to have this always updatable model. You open the model, you would see what the current expected share price is, and you can see what the current share price is and what the delta is. It worked beautifully. It was really well, like it worked really well. On the private side, not at all. Like the experience is not the same. And I'm sure folks on the call would agree. The experience is not the same. But if you do this on a systematic basis and you have this like taxonomy built up, taxonomy metrics built up, you can have auto updatable models as well. And you can supplement that in a lot of cases from like secondary markets as well. Like I don't have a NYSE equivalent for this, but in a lot of cases, I can supplement data from like secondary markets as well and have really high confidence on, okay, my own underwriting models are tracking the company really well, so that when an opportunity arises, this could be a follow-on investment, an exit opportunity, a liquidity opportunity, you are very confident. You don't scramble to build a model like that. Like most investors that we talk to do this on a case-by-case basis. Like, hey, there's this opportunity or this event that has come up, and now I need to like scramble to find data and pull all-nighters and update this model. We're going to save you a lot of nights sleep if you are just doing this on a systematic basis. This is again the part that I talked about, which is the thing that people don't hate reporting. For me, I love talking to my investors, but I hate the job that I have to do, like collect all the data around it. To be honest, I don't do it, like folks on my team do it, but when I had to do it, like I used to hate that. So the key lesson for me is like people want to communicate and people want to focus on communicating. People don't want to focus on data collation. And like, if you have all of that data ready for you in an Excel, in a database, and you just need to pull in that data and like pull that into the graph, you can then focus on what do you want to communicate to your LPs, or what do you want to communicate to like when you're fundraising, for example. You can create stories rather than like worry about data. And to me, that's beautiful. Like it's just one of the key reasons why we think a lot about like Synaptic. Why we build Synaptic, like to help investors just do more with data. Like whenever we are able to achieve that, it's beautiful in my mind. And like Christian said, this is, I think, the last use case that we talk about. The number of use cases are very much like even beyond this. There are a number of use cases. I like to think that like my job is to like, or our job at Synaptic is to like get the data to you in an accessible format, give the tools to you, and then our investors and customers just like find new ways to use that data in their own process. Like it's we just have to provide the tools to our customers.
Rohit, there's a couple questions coming in. I know we're about to hit the last slide, and these are great questions. So let's cover this last one, and then just looking at time, we'll go into a few of these questions. They're all highly relevant, so I'll let you close this out with the last slide.
Cool. Yeah, this is a warning slide. This is both me and my co-founder come from a security background, so we are like really paranoid about it here at Synaptic. But I really thought this is important for everyone to like understand and know as well in the room that like whenever you're thinking about creating a process around this, whenever you're thinking about creating a solution around it, buying a solution, evaluating a solution, think about security in a non-negotiable way. Like this is of paramount importance. Like you don't want to be a fund. You like companies are interesting you with like really their secrets, so to say, right? Like, and you don't want to be the fund that like enables them like that enable them to like leak them. And think about like security beyond SOC 2. SOC 2 is the base on which this environment, the security paradigm is built. SOC 2 is the bare minimum. Think about like how do they handle human processes, which is a really big point of failure. How do they like ring fence, which is like sometimes what will happen is like there are going to be breaches, but how do I contain the breaches? Like how do I limit the blast radius? Which means that like, hey, if something happened to like one update, does that mean that like all of the data is exposed? Limiting the blast radius is like really important. And how do we handle like just people, which is a really important part of the puzzle. Because like I said, like the ideal solution in our case is like an expert with AI assisting them, and making sure that the expert is aligned with you in the security paradigm is really important as well.
And I know we could talk about this at length because we've been through the ringer in security questionnaires and diligence forums with many of our clients. And if folks have questions about that, I think Rohit's security background prior to Synaptic gives you a lot of expertise here as well. So if folks want to dig in, we're happy to chat about that. I'm going to dig into some of these questions. I think they're highly relevant. And the first one that pops out, I'll read it off, and I can take a stab at this, Rohit, and then pass it to you. But it says, as a fund-to-fund investor, would love to know how you think about the portfolio data and what we can do with it. I think this goes hand in hand. All of the principles we've talked about today apply to fund-to-funds as well. You can ingest GP updates in the same way as company updates. In fact, I know we are working with a few LPs, fund-to-fund investors right now. And the use cases, if you think about this, fund level profiles, you can do benchmarking in addition to company profiles. And then one really interesting use case is seeing the same company across funds. How are different funds valuing the same company, for example? Or how much total exposure do you have to a company across your fund investments is another really interesting analysis that comes out of that. And that's been a really, really exciting unlock for us as we've been doing this. If you want to add anything, Rohit, I'll go to the next question that's in here.
Oh no, like you mentioned, like it is in the end like pulling metrics with some additional metadata, in the same way that like company updates work, like pulling that from GP updates, and GP updates often contain company updates as well. So it's very similar. It is a place where like similar principles apply.
Yeah, absolutely. And then here's another one. I think this one I think will excite you, Rohit, because it says you mentioned pulling in data. What are the data inputs? Currently, we get inputs from board decks, email updates, Zooms, even SMS. And I know we can talk about that as well. Can Synaptic handle online and offline updates? And yeah, I'll let you take this because this goes to a lot of the principles we were discussing.
Oh yeah, we do. Like the paradigm is like we'll take it in everything. The board decks and email updates are easier because like you just like we set up an auto like an email ID for each customer where they just send in board decks, email updates, the Zoom video links as well, and we'll extract data out of that. The SMS and the WhatsApp is also like you just forward that to a Slack bot and we get that information. But where it starts to get really interesting is when we start pulling in like meeting notes. Like I just met this founder. This is what he told me about this. And you can do that in a channel that's like dedicated to just sharing those updates. You can add Synaptic to it. Our analysts will like read through those updates. We'll automatically get those. We get a copy of that. We extract data out of that. We destroy the copy on our end because we don't want to keep that copy. We just want to keep the extracted data. And we'll assign a confidence score as well. Like, hey, he just told me this and I have high confidence in this based on the tone that we see or the context that we see, or hey, he suspected like this is the case, like they are at this number, and we'll assign a confidence score to that as well. So essentially like the sky's the limit when it comes to updates. Like the more information that we have, the more perfect is the system. And this is a system that we're like building out, which is essentially allows you to like even pull in like data from meeting and notes.
Thanks, Rohit. And then just in the interest of time, I'll close this out with one final question. And this goes, we've talked about this a little bit, but we'll get more detailed, and I can kick this one off, Rohit. It says, what are some of the most common or powerful ways you are seeing funds using benchmarking? And I think for me, the first thing that comes to mind is diligencing. Think about having your portfolio data organized and then comparing a target to let's say your top quartile of companies. That's a really common one. And when we talk about the nuance with data and the mess of metrics, when you have that cleaned, you can really go a lot deeper beyond just something like ARR. I know we've seen some of our clients start to look at detailed metrics like CAC payback or capital efficiency metrics, like really getting into the weeds on the metrics that are tagged. I know that's been really valuable. And then I know, Rohit, you've talked to us. I'll let you take the second one that I'm thinking of, but it's around like, and you talked about this earlier in the 360-degree analysis of adding value to the portfolio companies with benchmarking. Can you talk about that use case a little bit?
Oh, it's basically you you can use data to inform your portfolio founders better. And the really good part about using data to inform portfolio founders is it's backed in more facts than anecdotes. So it's better advice. But B, also founders are more likely to listen to you when you show them like hard cold facts, which is like, hey, this is what companies that are very similar to you have been doing. You should have a really good reason to deviate from this, because in my advice, this is how much you should be spending on sales and marketing. What do you think is unique about you? That is, and there are cases that are going to be unique, but what you can do is like, you can turn the discussion into like this really high value add data backed discussion rather than like you talking about anecdotes. And we've just seen that advice sticks much better when you're able to like back it with data, which means better portfolio outcomes, like founders making better decisions and much better for your fund. And I wish all of my investors, they will eventually, but I wish all of my investors had all of this data and I could like look at that.
Yeah, thanks, Rohit. And I'll close this out just looking at the time. For everyone that joined us today and has stayed on through the end, thank you so much for joining us. We really love digging into this. This is a result of many conversations with investors and many hours and weeks and months of hard work. So we're excited to share these insights and always passionate about connecting with people. Like you mentioned, Rohit and I are actually in SF through next week. So feel free to reach out to us directly. And whether that's connecting in SF if you're here, or for a Zoom call in the next few weeks, you can reach out to Rohit at rohit@synaptic.com, or myself, Christian@synaptic.com. So it's just our first names at synaptic.com. We'll set up time. If anyone has follow-up questions, don't hesitate to reach out either. And thanks again for joining us. Really appreciate the questions and everyone's attendance.
Absolutely.
Thanks, Rohit. See you guys.
Thanks, Christian. Thanks, everyone.